The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
It's time for another edition of Zacks Rank Buys. I'm Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And this week I'm going to take a look at two pretty different companies here, one that is about to report and one that just recently reported. So let's go first to the one that is about to report. And this is Extended Stay America, and the ticker is STAY. And if we take a look here at the screen, we can see that it is a Zacks rank #1 strong buy. It's got great growth and value style scores, an A for value and a B for growth. Normally, I like to see a divergence in those two style scores, but I'm okay with it right here with a stock that trades at about 17 times forward earnings. Now, if we take a look at why this is a Zacks rank #1, we can see, first of all, that we've got a great report history. So the last 4 reports, we've seen 4 straight beats of the Zacks consensus estimate by an average of 8%. Now that's pretty good, but what we really care about is what's coming up. Now we notice that the current quarter has got 14 cents, as does the next quarter. With no real movement there, we're left to wonder, is this company going to beat earnings when the next report comes out? And that's going to be approximately February 28th. Well, right here we notice that the most accurate estimate is 17 cents, and that gives us a positive earnings ESP potential surprise of 21%. And that's something that I definitely like to see. Next up is Inphi Corporation. IPHI is the ticker. And I like this one as it is a chip stock that just recently beat. We see it as a strong buy, Zacks rank #1 strong buy with a B style score for growth. Now, if we take a look at here, we're going to see that the F for value, is something that I do like to see in that divergence there. I want to see the growth investors looking for this sort of name, and I want to see the value investors not really care. There's a big gap between what growth investors will pay for a stock and what value investors will pay for a stock. And when growth investors are there, the stock continues to move up. So don't be afraid of a 40 times PE when you've got a stock that recently beat and guided higher. I'll get into the guide in just a minute here, but let's take a look at the beat history here. We see the last 4 quarters, all of them beats, with an average surprise 48% ahead of the Zacks consensus estimate. As we look out, for the current year, it's $1.20 for the estimates right here, but we can see that the next fiscal year has estimates moving up substantially from $1.59 to $1.82. Now, when we talk about stocks that beat and raise, obviously they posted a beat of the Zacks consensus estimate, but they also raised guidance. And for the next quarter, they're looking at revenue. The midpoint of the revenue guide is $93.5 million in sales, whereas the consensus estimate is calling for $85 million. When we see an increase like that in sales, we're only left to believe that earnings are also going to move higher. So that's it this week for 2 aggressive growth stock buys. I'm Brian Bolin.